Hello friends, we'll be discussing certain details of the features of issue of debentures and the various kinds of information that we have related to it. Now we'll be discussing the topics or rather features of debentures that we have. We have mentioned certain point here. Let's read it out for you. Debentures are instruments of debt, which means that debenture holders become the creditor of the company. As rightly said, debenture is a loan that is provided to the company by the debenture holders. So that is basically a credit instrument here. Let's go on to the next point. They are certificate of debt which or rather with the date of redemption and the amount of repayment mentioned on it. The certificate is issued under the company seal and is known as a debenture deed. Now, whenever a debenture is issued, there is a certificate of debt that is provided by the company with the company seal on it, which mentions certain details. What are those details has been mentioned here. It includes the total amount of repayment and the date of redemption. That means on what date this amount will be repaid to the debenture holder is mentioned with the company seal on it. Hence, this is also known as debenture deed, which gives you an authority or it's a negotiable instrument which can be claimed or rather which can be used in case if the company denies the claim here. Let's go on to the next point of debentures. Debentures have a fixed rate of interest and such interest amount is payable yearly or half yearly. Debentures, unlike shares where they have dividends, debentures don't have dividends at all. They have fixed rate of interest which is supposed to be provided by the company to these debenture holders, and this can be either provided half yearly or yearly basis. That means once in a year or twice in a year, which is at company's discretion. Let's go to the next point. Debenture holders do not get any voting rights. This is because they are not instrument of equity, so debenture holders are not owners of the company, only creditors. Now, if you have equity and preference shares, they have voting rights. Why? Is because they are the equity holders or rather the preference shareholders of the company. Hence, they have that voting right. But in terms of debenture holders, they are only the creditors of the company and hence they have no right into the management or into the functioning of the company itself. Hence, in such a scenario, they have no voting rights made available to them. Let's go on to the next point here. The interest payable to these debentures holders is a charge against the profit of the company, so these payments have to be made even in the case of a loss. As we know that dividend is provided only in the case of profit. Unlike that, interest is not a part which is liable to the loss or rather which is liable only to be paid when it is or rather if the company is making profit. If the company is making loss, this interest is supposed to be paid. If you are paying EMIs on monthly time, no matter if you're getting salary or not, you have to pay that EMI. In such a scenario or rather in the same case, you have to pay this interest no matter whether your company is making profit or whether your company is making loss. Let's go on to the part where we'll be understanding the advantages and disadvantages of it. Now we're discussing about the advantages of debentures. What basically it takes for us to have debentures with us and what are the advantages of maintaining or rather keeping a debenture with us or being a debenture holder in the first place. First point has been mentioned. One of the biggest advantages of debentures is that the company can get its required funds without diluting equity. If they're giving out shares, that means they're diluting their equity. Some of your stock is being given to the public. That means your capital will go down and their capital balance will keep on increasing because you're diluting your equity here. But debenture gives you this freedom whereby you don't have to dilute your equity. That means you don't have to issue shares at all. You can just issue debentures and take a loan from the people who are investing in your company, and later on at a fixed time or rather at any point of repayment period which has been mentioned in the debenture deed, you can go ahead and repay the interest and the repayment amount which is supposed to be done. Hence, that is one point here. Since the debentures are form of debt, the equity of the company remains unchanged. As debenture is taking a form of debt and it is not taking a form of equity, hence the equity balance is undiluted, it is remaining stagnant and constant. Let's go on to the next advantage of this. Interest to be paid on debentures is a charge against profit of the company, but this is also means that it is a tax deductible expense and it is useful while tax planning. Correct. So If you're paying interest, that means you're cutting off profit, or rather you're cutting off that much part from your profit. But it doesn't mean that you cannot claim a tax exemption here. Of course you can claim a tax exemption here, and hence that is the same thing that you are doing until, or rather whenever you have to go ahead and discuss about tax deductions when it comes to interest being paid out on such EMIs or interest being paid out on such prepayments. Let's go on to a few more points of this. Debentures encourage long-term planning and funding, and compared to other forms of lending, debentures tend to be cheaper. Now, if you're taking loan from some random financial company, you might be charged as 22%, 32%, or any percent that they feel, or rather that they feel fit for you. But if you're going for a specific loan, from a specific bank which is reputed, which has knowledge of all these things, you might be charged at a rate of 13%, 14%, max 16%. Now, the difference between these two is that one is cheaper, one is expensive. Same way, debentures, as compared to any liquidity or rather equity holder shares that we have, in debentures you get everything at a cheaper rate. That means you have to pay up interest, which is very cheap. You get your fundings, and you can plan your tax planning as well as your company's working capital needs will be met here. Let's go on to the next point. Debenture holders bear very little risk since the loan is secured and the interest is payable even in the case of loss to the company. If I'm the debenture holder of a company, I will be very released, or rather relieved, about any other thing, because this is very low risk profile item. And the reason why I'm saying this is because interest is paid even if there is any kind of loss. Unlike shares, equity or preference, whatever it may be, dividend will be paid only if there is a profit. So if the company is not making profit, you're not supposed to get any income or any dividend out of the investment that you have done. But in terms of debentures, you're absolutely supposed to receive interest, and that specific debenture is also secured one. That means there is certain collateral which you have with you as a bargaining factor. Let's go on to the next point. At times of inflation, debentures are the preferred instrument to raise funds since they have a fixed rate of interest. If in case of inflation, when you know that taking loan from other informations or other sources might have you fall in a pit whereby you go ahead and give out certain details, or rather you go ahead and tell to them that you have certain details to take care of, and with all these details you have to understand that the interest rate that you will be providing there will be much higher as compared to any other source, or rather debentures here, in specific reasons. Now, debentures having a fixed rate of interest, no matter whether there is inflation or deflation, you have to go ahead and give out only that rate of interest. So if there is inflation and if people are paying 22%, you are still supposed to pay 12% because that is your fixed rate of interest. Hence, it is a cheaper part. Let's go to the next part. Now we'll be talking about disadvantages of debentures. The interest payable to debenture holder is a financial burden of the company. It is payable even in the event of a loss. Yes, of course, with all the advantages, there are certain disadvantages as well for a debenture. As you're paying up interest, similarly, if you're making loss there, it becomes little challenging for you to pay up the interest as well. Hence, it, or rather this specific item, is a part of disadvantage of debenture, whereby you cannot skip the interest part, you have to keep paying that thing. Let's go to the next point. While issuing debentures help a company trade on equity, it also makes dependent on a debt. A skewed debt equity ratio is not good for the financial health of the company. That means when we are discussing about the debt holder, that means the liability and the assets. We understand that the liability has to be 1:2 ratio. That means if you have one liability, you need to have two assets in front of that. But if you're only dealing with debentures, you become a debt-ridden company. And if you have a skewed debt equity ratio, which is not good for any company's financial standards. So you need to make sure that this point is not revived there. Let's go on to the next point. Redemption of debentures is a significant cash outflow for the company, which can be imbalanced if liquidity. Now, at certain point of time, you're supposed to repay this amount to the debenture holders. Now, in that year, if there are certain incontingencies, or rather we are talking about certain imbalance that happens to your equity, in such a scenario, you cannot skip the date of repayment. You have to give the amount to the debenture holders at that day itself. Hence, there is a little risk that you have to take when it comes to redemption or repayment of these debentures. Let's go on to the next part. During a depression, when profits are declining, debentures can prove to be very expensive due to their fixed rate of interest. Now, in the earlier part, we have discussed about the inflation, how inflation can help you get debentures at a lower rate of interest because their interest is absolutely fixed. But if there is same thing, or rather the same thing can be harmful if there is deflation, whereby in market the interest rates are going down, but as you have fixed rate of interest, you still have to provide that much of interest no matter if the market is paying less amount there. Hence, this is the only disadvantage that we have when it comes to deflation and inflation of a specific fund. Now, when we're talking about advantages and disadvantages of debentures, these are the things that we have to discuss about. So, when we discuss about advantages and disadvantages, you can mention all these points that we have mentioned here, or rather we have spoken about, we have discussed about, and all these advantages and disadvantages are pretty easy to remember. Inflation, deflation, interest rate, equity, preference, and the comparison between equity and preference with debentures here will help you sort everything in your mind. So this is all what we had to talk about features of debentures. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.